All righty, folks, here it is. Yes, he is wearing a tie, and he just asked me to be a personal reference for his job interview at, I don't know, Starbucks or something. Of course, I kid. I like the tie, man. That's actually a tie I think I'd wear. Nice job.
Thank you. Yeah, I like this one too. It's my favorite.
Oh, this is very, very cool. Well, I love how you're stepping up for the channel. You're coming out swinging with the tie on. I will not be putting on a tie, but I do have a Robert Graham limited edition shirt on today. So,
yeah, it's a nice shirt. I like that. Are the sleeves, is that purple?
Yeah, it's purple when you fold them over. Yeah, it's my color. So I saw this crazy expensive limited edition shirt and I had to buy it. So
nice.
Anyways, hey, I want to talk about the Fed. You and I get the luckiness of speaking on Wednesday. Wednesday is always Fed day. So we'll start with the layup and then we'll get into harder questions. What happens on rate increase? What is the percent chance cut, hold, raise? What do you see?
I see the overwhelming favorite in this fight being the pause.
Okay.
And so I'll slap an 85% chance that we pause, and then 15% that they hike it a quarter.
Sure.
And, there's a little bit of stickiness with inflation where, it didn't blow projections out of the water where they probably could justify that quarter basis point hike. I think one of the reasons in my head why it's more likely a pause is because they already set themselves up to say, hey, we can still pause in June, but hike in July. So they know that they can wait it out and with another month's of data be like, okay, cool. We'll continue to pause. Or if another month's data comes out and they're like, that's, things aren't progressing as we hoped, then they can jam a 25 basis point hike in next month. But, this month, more than likely a pause. And so I think it's about an 85% shot.
All right. So 0, 85, 15. I'll go 0, 99, 1. Wow. Right? I've been on the they're done for a long time. I see no reason to change. I will give myself the 1% out. But yeah, I think it's that. But now the more interesting thing, we're going to get what's called the SOP, sometimes called the dot plot. These Fed presidents are going to talk about what they see, right? 18 PhDs saying, hey, this is what I see the future at. I do want people to realize that these are just guesses like my guesses are. They're no better or worse. And I would frankly say they've been worse historically than my calls, but they are still guesses. So I guess the first thing I want to talk about is the dot plot for future rates. So you're going to get 18 people. They're going to put it on a board. Where do you think the most hawkish person will be? Do you think anybody's going to say that rates have to get to 6%, for example?
There might be one.
Yeah, I think there might be one.
Yeah.
But 6% is kind of the most hawkish is what I'm thinking. What about you?
Yeah, I think so. I think that, it wouldn't blow my head off if, somebody, thought that we need more hikes.
Then the next question goes, if 6 is, so 6 would be 3 more hikes, just to kind of put it on the table, right? It would go to 5 3/4 to 6 is the range. That would be 3 more hikes. So I think 18 people, there'll be 18 dots on this, I believe. So how many of those do you think have the terminal rate above what it is today? Do you think half go above, more than half? What do you think?
I'm going to say a third.
Okay. Yeah, I actually think the SOP is one of their talking vehicles. So what do I mean by that? So again, the Fed has the Fed funds rate, which they can touch every 6 weeks. Technically, they can raise in emergency fashion. Doesn't happen very often. But they do have their voice. So my sneaky suspicion is they're going to use the SOP to be a hawkish indicator. And what does that mean? I'm going to say 12 of the 18, possibly even 13 of the 18, say we're going higher. And of course, I think it's utter nonsense, but I think they're going to use that going forward. So it'll be interesting to see. Again, this will come out at 11 o'clock or in about 1 hour. So we're talking ahead of time. It's now 10:10 Pacific.
I don't know where I heard it. Maybe it was our buddies on the All In podcast, or maybe it was somewhere else, but talking about, how the Fed has used, that platform. That's a market mover. People just look at what's happened to the Fed funds rate, but the discussions, the dot plot, what they say, exactly that in itself has the ability. And so I get what you're saying. And so, it'll be interesting to see, because honestly, We're recording this before, you
Yeah.
know, the announcement.
15 minutes before the announcement. So
Yeah,
we're guessing. Yeah.
On Fed Funds Day. This month, I thought to myself, we've got CPI, we've got PPI, we've got this other stuff that can move markets. For all intents and purposes, Mike, CPI comes out, and then this morning we get PPI, and like mortgage-backed securities are unchanged. Like there's really no change for you know.
Yeah.
And so I think it kind of proves how much weight and how much power the markets put on what the Fed's going to talk about, because you're 99%, I'm 85, most are 90 plus. We know what they're going to do with the Fed funds rate. What we don't know is what they're going to talk about. And so like,
exactly,
when I look at it from a mortgage perspective, mortgage-backed securities unchanged with other stuff, waiting to see what they say.
Yeah, exactly. So the next thing we're going to talk about that's in the SOP that I'll be interested at is GDP. Again, last quarter, because they do this once a quarter, they kind of had a sneaky surprise in it that only a couple of people caught. Right. Again, Q1 GDP was positive 1.4 or 1.8, whatever it was. But their year-end GDP targets were like 0.2, I think. So without saying it, they were calling for a recession, because that's the only way you get from a positive 1.8 to 0.2 is to have a recession at least 2 quarters down. It'll be interesting to see if they still are calling recession in 2023. Again, they won't explicitly call it. It'll be in the dot plots. My guess is that pushes to 2024. What do you think?
Yeah. You know, it seems like a lot of things, you know, GDP and inflation, everything like are happening slower than people expected. So it's like, you know, we got the same projection. It's just pushed out a little bit farther.
Yeah, I agree with that. The next thing is inflation, right? I think they were talking about inflation from the SOP ending 2023. It's something like 3.2 and next year at like 2.5. I think we're going to see some pretty big adjustments in their inflation expectations. What about you?
Yeah, I mean, because I've heard, maybe it was listening to your morning update. You know, a lot of people think we're going to see a 3 handle next month in July.
Next month,
we got exactly. A 3 handle, a 3.9 by July. You know, it would be interesting to see if projections show a 2 handle. You know, a 2.8, a 2.9 by the end of 2023. So as we kind of expected, inflation needs to, or seems to be coming, you know, towards this 2% target faster than some of them projected. And so, you know, updated projections there, I would expect.
Yeah. And just to tie it out, CPI last reading in June, the June reading, which came out yesterday, was 4. I think the current expectation is it will be 3.0. But given the base effect that rolls off commodities and used cars rolling over, it wouldn't shock me if it's 2.9. What, 6 weeks from now, 4 weeks from now, whatever it is. So it could be wild to see headline inflation with a 2 on it. Woo, that would be bonkers.
Right.
All right. What about
for people that wonder how that affects mortgage rates? That's downward pressure on mortgage rates.
You would think, right? You would
think, yeah.
It is a weird world we live in. But yeah, inflation rate at 2.9, Fed funds at 5.25 or 5 point whatever it is. You would think mortgage rates would come in for sure. Right. Yeah. And then the last thing we'll talk about here is unemployment. Again, from memory, and this I'm pretty foggy on this, so I might be off, but I think they were talking about end of year unemployment at like 4.1 or 4.2, with unemployment peaking sometime next year at 4.7 or 4.8. It'll be interesting to see if they bring employment up or down this year, I think.
Yeah. And truth be told, I've got, my eye on the prize and I'm focused on mortgage and real estate. I don't pay that much attention to it. I especially don't, just to be completely transparent, when you look at some of the reports and you realize like, oh, well, they included this, but not that. And it includes part-time and this. And I'm like, what does the number even friggin' mean? Right. Exactly. And so with all that being said, I'm not paying attention to that number, for better or for worse. Yeah. But yeah, it'll be interesting to see nonetheless.
Yeah. For me on the unemployment rate, it's really not so much the number for me. It's the rate of change, right? It's the rate of change. And if we're just ticking up a tenth every month or so, the rate of change is not much. But if we have a big month where we'd like jump 0.5%, that will catch my attention. So again, they're there. At the end of the day, we're going to see the SOP, the dot plot, the presser all today. It'll be very, very fun. Matt, if somebody want to reach out and get a quote, understand what their options are, how are we doing that?
Easy peasy. Greatmortgagebroker.com. You fill out that form, connect with me and my team. My branch is licensed in 10 states. You know, my partner branch in Utah is licensed in 38. So between the two of us, we've got 48 states. And really, you know, name, email, phone, where you're looking by, what you're looking to do, immediately connected. We've got some really cool success stories. And I think I might do an interview with One Rental at a Time, Matt the Mortgage Guy, follower, just closed a deal in Oklahoma City.
Nice.
Adam from our Utah branch helped him close it. And both of those guys came to me and said, this is a story worth telling. Because I guess it was not all sunshine and rainbows, but we made it to the finish line. So
but you got it done.
Greatmortgagebroker.com to connect with us.
Folks, and also just so you know, if you happen to be in Fresno or the Central Valley, he is actually taking up space at the hub. We are looking to help you in Fresno and more importantly, document those stories so we can help people around the world. Matt, thank you for all you do. Take care.
Thanks, Mike.